Hello, good morning. It's Wednesday, February 27th. 2 days left of the winter before we move into spring. It seems like spring has arrived in London already. Yesterday, temperatures went up to around 20 degrees. Seems like spring has also had a bit of an impact on the UK Parliament. The Brexit drama continues, but for a change, the market is reacting to some potentially positive news. Prime Minister May yesterday caved in to pro-Europe members of her own party, basically delaying the vote that was otherwise planned for today. What is now in the cards is that following the March vote March vote, if that is being rejected, there will be a vote the following day where basically the Parliament can vote whether they want to have a hard Brexit or not, and that could potentially lead to a delay in the process. So all of this, if we jump into the first chart here, led to quite a strong move in sterling yesterday. We saw the sterling against the dollar jump to a 5-month high. We are back now testing the previous highs there around 133. Even more in euro sterling, where you can see we dropped to euro sterling dropped to a 21-month low. The move was already starting this time yesterday morning, where there was some talk about Corbyn favouring a second referendum. But the May delay yesterday, or May's announcement of a potential vote to delay the proceedings, really sent sterling flying. So this is what the market is facing with this morning. So we're basically looking at a currency now which is one of the strongest or best performing currencies so far this year. Elsewhere, in the market, we saw limited reaction yesterday in the US to Powell's first testimony, and as you can see here in the S&P, we did drift a little bit lower. Bond yields, meanwhile, has also been drifting lower. We're seeing the S&P continuing to find resistance here just above the 2,800 mark. So we are drifting lower there. Powell's testimony didn't really trigger much of a reaction. He was saying that the economy is still facing some cross currents and conflicting signals, and that has been warranting the patient approach to future interest rate decisions. Today, he's moving to the House, and once again, the testimony will continue there. I'm just losing my charts here. Let's get it back. Here it is. And what's interesting today is that he's going to be facing Alexandria Ocasio-Cortez, AOC, as she's called, this the new Democratic firebrand, and she's basically been advocating for calling for unlimited borrowing, and also that the Fed should fund her new green deal. So potentially some fireworks await. So get your popcorn out. Could be an interesting sparring between these two. Elsewhere, if we move to the commodity space, oil trades are higher overnight. We saw a surprise inventory rise yesterday announced by the American Petroleum Institute. You can see it on the chart here, some of the numbers and the reason why they did surprise quite a bit. In the bottom left, you can see the table where the API basically estimated that crude stocks last week dropped by more than 4 million barrels. That goes against the EIA surveys ahead of today's official report, which is looking for 3 million barrel increase. So it highlights the crude oil is probably settling into this range here, 64 to the downside, 68.50 to the upside on Brent crude. We do have also we did have some information from Russia as well. They said that they have cut production in line with what they had agreed to cut, so that also provided some support to the market. So key there today is the inventory report later this afternoon. And we've been talking about metals in recent days, and we've seen quite a bit of a move higher in some of the industrial related metals. Just taking a look at this chart here highlights some of the major moves we're seeing right now. This is the total holdings in exchange traded funds backed by platinum, which is the blue line, and gold, which is the red line. What we've seen in the past few days is that or the past couple of months now in platinum, that we've seen a record inflow of new investors moving into platinum, basically just looking at this multi-year low we had while palladium has been racing higher. That's been providing some support to platinum, and at the same time gold we have stabilized in recent days. We've been trading, or we've seen some reduction now for the past 18 days, and it probably ties in with the fact that we have moved this up very strongly in gold now for the past few months. We are getting close to this level where up towards the 1350 to 1375 area where the market has been rejected on several occasions since 2016. So it just basically has led to some profit taking here in the market, and that's reflecting these in these movements, but generally the spread has narrowed quite substantially now in between gold and platinum. It has come down to 464. It was around 525 just a couple of weeks ago. Before we go to the calendar, just want to highlight that this afternoon I'll be holding my monthly commodity webinar. As you can see on the table here, it's very easy to get involved. You can just go into webinars.saxo, and that will take you to the sign up page. It will kick off this afternoon at 12:30 GMT. I'll obviously be highlighting some of the recent developments in commodities, which generally has had a good start to the year. Finally, the calendar for today. We got some CPI coming out from Canada early on, and then later on some interesting data from the US again, factory orders and pending home sales at 3 o'clock GMT. At the same time, Fed's Powell will kick up his testimony to the House. And then, as I mentioned, 3:30 GMT, 4:30 CET, we got the EIA's petroleum status update. And just on the blue there on the right, you can see the change that we have now on March 13. We have the additional vote to leave without a deal or potentially delay, and that's really the one that the market has been reacting so strongly to in sterling. So plenty of news, more news to come from London, I'm sure, and we'll keep an eye on that. That's it from me today. We'll be back again tomorrow. Thank you very much.